Hi everyone, this is Alvin, the CEO of Dr. Wealth, and today I want to share about an offer that is given to Frasers Hospitality Trust unit holders. And first of all, the disclaimer, right? I'm not a financial advisor and this should not be constituted as financial advice. So with that aside, let's talk about the deal. So the deal is a 70 cents cash offer for Frasers Hospitality Trust unit holders, and the offerer is another listed company. In fact, it's the parent company, Frasers Property. And after this deal is done, Frasers Hospitality Trust will be delisted from the exchange and it will become a wholly owned subsidiary of Frasers Property. So that is what the deal is. Of course, then now let's talk about whether this deal makes sense for unit holders and how do you think about it. And if we take a look at the hospitality results, right, because of the opening up of the world, we know that hospitality has suffered for 2 years and now it is their time to make back the money that they have lost. And I believe that some of you have already even traveled out of your country, right, to visit and travel. And this kind of trend is probably going to continue for many more years to come, provided, touch wood, no new virus is going to come in that end up in another pandemic. So if we look at the first half 2022 revenue and results of this Frasers Hospitality Trust, and we are able to see that majority of the country has reported higher revenue from a year ago, right? So the main countries that Frasers Hospitality Trust are exposed to is Singapore, Australia, and UK, right? So these three add up together is like more than what, 70%, 80% of their revenue generation. So these countries have opened up for tourists, and that's how I think that in terms of recovery, they are already on route to do that, and their statements are showing that, their results are showing that. And unfortunately, if we compare to pre-COVID levels, right, the hotels have not really recovered to before the pandemic happens. For example, we look at Australia, and if we look at their revenue per available room, this is a very standard metric for hospitality. How you get this revenue per available room is actually getting the average room rate multiplied by the occupancy rate, right? So if you have high occupancy, high room rate, then your revenue per available room goes up, right? So it's a measurement in that sense. So you want this as high as possible. If we look at Australia, it is still 71% below its pre-COVID RevPAR, right? Revenue per available room. And Singapore is about 50% down. UK is about 44%. So slightly better, but it's still a big chunk of it. And Japan is 58%, Malaysia is 73%. So you can see, regardless which country Far East H Trust is exposed to, the numbers or the fundamentals have not recovered to pre-COVID levels yet, right? Even though we saw some improvement, it's still far from pre-pandemic. And if we look at their results, right, in terms of across a 5 years period, whether is it their revenue, their net property income, their distribution per unit, so it has been going down slightly before the pandemic, but since the pandemic, the drop has been significant. And if we base on the offer price of 70 cents and compare it with the latest FY21 dividend or distribution from the trust itself, we are just getting at 1.4% dividend yield. That is very low for a hospitality trust, right? That gives you another idea that because the offer price is high, it's a significant offer price, that's why the yield has been driven down, because dividend yield is equal to dividend per share divided by share price, right? The denominator has went up. So I would say that this 70 cents is actually very fair, and it's actually pricing in the recovery already, right? So let's explain this, right? So if we compare to the pre-COVID share price, is about 10% above, right? This 70 cents offer is already higher than the pre-COVID share price, 10% above. And if you compare to the COVID low, it is 110% higher. So even if you bought this Frasers Hospitality Trust before the pandemic happens, right, you are still likely to sit on a profit. Okay, so that's why I think that on this first point, this 70 cents offer is actually fair. And we look at more things, right? So if this number, 70 cents, is already higher than pre-COVID, that means that it is assuming that if you continue to hold on to FHT and it really recovers, you should eventually be able to sell somewhere around 70 cents, maybe next year, next year. So they are bringing forward this 70 cents today for you to exit. So I think this is the second point why it is fair. And then some might compare, right? But the IPO price was 88 cents and now they're offering at 70 cents. Is below what I've paid for. But if you have bought since IPO in 21.4, you have collected a lot of dividends every single year. And it would be higher than the 88 cents you paid for if you include the 70 cents plus the sum of all the dividends collected, right? So I do think that there should be a majority of investors clocking a profit than a loss, right? When we look at this 70 cents offer. Okay, so how would this pan out? This would be a scheme of arrangement. That means the decision to delist this company will be, or this trust is based on voting. It is not based on something like, okay, I'm going to accept the offer, please just pay me the amount for the shares that I have that I'm selling to you, right? So it's based on a vote. The unit holders are going to go for EGM. Okay, it will be somewhere around September. That's the expected date, and the people over there, okay, has to approve 75%, right, of or let's put it the other way, 75% of the unit holders over there should approve the this offer, right, in order for it to go through. If there is less than 75%, then it will not happen, right? If you can also hire you can also appoint a proxy, right? Not necessarily you want to attend it, but of course if you are very interested in either way, right, approving this deal or disapproving this deal, you should vote so that your vote is counted in that sense. Okay, the offerer will not be voting, so it's all left to the other shareholders or unit holders in this case. And if, let's say, the approval is done, that means that the delisting is expected to be done, completed in 4Q 2022 before the end of this year. So that is what it looks like. I think this is a pretty simple deal, and I think that the offer is high enough to entice enough unit holders to vote for. So just for disclosure purpose, I'm not a unit holder of FHT. I'm also not a shareholder of Frasers Property, right? But from a bystander viewpoint, from an analyst viewpoint, I do think that this offer is very likely to go through. And, unit holders get a good price, exit in advance before the recovery of Hospitality Trust, and you can take this capital to redeploy somewhere in the markets. And especially, market now is not doing very well. You might be able to buy better stocks at much cheaper prices. So I think this is quite a timely offer, and I believe most unit holders will be taking it. Thank you for watching, and I hope this video has been useful for you. Remember, give me a thumbs up for this video, as well as subscribe to our channel so that you'll not miss another video like this. I'm Alvin. I'll see you around. Goodbye.